On welcome TradeMindfully.com channel. Today I wanted to do a brief video on tape reading, a lost art of tape reading, or reading the market by its own actions with price and volume, bar by bar. This is a chart of the S&P E-mini futures contract as it traded earlier this week on Tuesday. That was February 20th. And this is the 5-minute chart, the standard chart that we use on the intraday time frame. And the trading that occurred in the US morning session and a little bit earlier, some of the European session as well. So from the chart, we made an overnight low in the European session and tried to rally up above that, but couldn't continue to do so, and instead, off of the American Open, the American Session Open, could not hold that overnight low. And instead, we see selling enter, and the market has some wide range bars down with good heavy volume. And we closed down well underneath the overnight low. Now, as we rally back up into the overnight low area, we'd be interested in a short opportunity, right? Old support, when we've broken through and then we're approaching it from the underside, becomes resistance, becomes new resistance. That's a classic rule of thumb, if you will, in classic technical analysis. Then the question becomes, does that level hold or not? Well, we'll know if it's going to hold or if it's going to be if we're going to see it push through by the price action. So let's do a little tape reading and see how that works. So we see a pretty good rally coming up. And then as we reach the overnight low, we do so with a slight pickup in volume. So volume's expanding a little bit, and that's generally bullish as we're going up. But notice that we close off of the highs, right? We're closing on the high on this bar, but not on this bar. So that's an indication that sellers came in and pushed the close down. Doesn't necessarily mean anything at this point, just an indication here. Next bar, we see a low volume bar, and this one closes firm, but we're not really closing much over the prior bar's high or really much over. We're just getting over the overnight low, but we're doing so on pretty light volume. This is what we call no demand. And it's the basic question asked here is, where did those buyers go? Similar now, the next bar, similar to that first bar we looked at, we're seeing more volume coming in and a close off of the highs. Sellers are preventing clearly, that's not a surprise since we have all that heavy supply with wide spreads down, closing firm to the downside on heavy, heavy volume. We're back in the area where supply came into the market. So it's not a surprise to see demand weaken out up there and supply start to come in. We've got supply in the background and we're at resistance. So price falls below the overnight low and closes poorly. This is not bullish. This is not bullish indication at all. And in fact, it's a good spot to go short. We can initiate a short trade here, stop above the recent highs. Then on a couple of other bars here, we come down a little bit. We try to rally back up above, not expanding any volume. We try to do that once here, and again 2 bars later. Notice how narrow range this bar is, and the volume is low volume. Here on the way up, we saw this kind of volume, and now over here, we're not able to rally up, and the volume is actually quite a bit lower. And so this is no demand, and also good locations, either of these bars, good locations for a short trade, especially this one, this no demand, but also this one, either of those were fine. Now, what happens next? We see the market drop through and we pick up volume to the downside. Very bearish, right? Very bearish. And then we can draw a trend line in here along the lows of the prior support And just like earlier, old support, now as we approach from the underneath, becomes resistance. Look at the low volume as we try to rally up. The volume tails off. Then we get a reversal bar here. This is what we also call a hidden up thrust. And that is a nice spot to short as well. Either initiating a short trade or adding to the short position we created a little bit higher up over here. So price drops down, look at the volume expand to the downside. That's lovely for our shorts, right? We like that. And down into this area. Now, as we try to go a little bit lower, notice how the volume is starting to tail off. This is giving us a heads up that we are vulnerable to a rally at this point. And this has been a nice little run, nice little trend run down several points here, quite a few points in here. And that's our exit anywhere in here. And if for some reason you didn't see this and you're still short this market, clearly on this bar, we have to say buyers are stepping in and all shorts need to be covered. So that's a little bit about the almost lost art of tape reading. We're trying to keep it from being lost by work that we do. And I wanted just to point out this week that on our website, under the special course offerings, we have our course on tape reading through the Wyckoff method is available at a good discount through the end of the month. And if you're interested, you could come over to the website and check this out. There are several bonuses or a couple of bonuses that are included in this that help you to apply tape reading to the current markets. So a little bit on tape reading and a little bit about our trading offering, course offering on how to read the market. Hope you got something out of this little video, and hope to see you at trademindfully.com. Thank you very much. Bye-bye.